Hi, my name's Corey, and I'm on a mission to help 1,000 people become passive investors. So if you'd like to be part of our mission, please like, subscribe, and share this video today. All right, let's get started. Today, you're going to learn the difference between passive income and earned income, and also why passive income is one of the secrets of becoming wealthy. First, we're going to talk about earned income. Growing up, you don't learn a lot about other types of income. For the most part, you learn about how to gain skills to get a job. And for the most part, that's earned income. So income from your employment, or even if you have your own business, that income is earned income, okay? And there's some advantages and disadvantages of that type of income, but there's also some other nuances. One other nuance is that there's potential for Social Security income to be taxed if you make too much earned income outside of those Social Security benefits. Also, depending on who you are and how much you make, your tax rate doesn't always have to be really high with earned income. I think that's something that earned income actually gets a really bad reputation. And I think one of the reasons is that we assume that everyone is getting taxed at the highest tax bracket. The reality is that not everyone is in the highest tax bracket. Not everyone makes tons of money. Not everyone wants to make tons of money, okay? But if you do want to make more money, this type of income has a higher overall tax rate. And that tax rate in 2021 can range anywhere from 10% at the low end and 37% on the high end. That also includes income from, starting your own business. If you started a lawn cutting business and you went out to individuals to cut their grass, yes, that's your business, but you're still going to be taxed at a earned income tax rate. And that also extends to other businesses, professional services, and so on and so forth. And there's also some other slight caveats within the tax code. But again, before I get into anything around the tax code, I just want to let you know that I'm not a CPA, I'm not an attorney, so you should consult your own CPAs and attorneys before acting on any of the information you're learning on this video. And also, one thing that people talk about isn't always true is that, you're getting earned income, you're getting hit with really high taxation. That's not always the case. At lower incomes, actually the tax rates are actually pretty low. If you jump into the tax code, irs.gov, I go to that website all the time to read about the tax code. But if you go to that, you'd find that the tax rate for individuals starts at 10% and does go up to 37%, which is quite a bit higher. But as you can see, at those lower income levels, earned income is taxed much, much lower, which is a benefit. Now let's talk about my favorite form of income, which is passive income. Earlier, even in the description, I left you with a little teaser about how it's the secret of the wealthy. And I don't think it's necessarily a secret, but what I will say is that it's not really taught thoroughly, or at least wasn't taught to me thoroughly in our schools. And even within my family, it wasn't something that I think we were used to getting. So it's something that I had to learn to understand, and I'm not even there to master it yet, but I think that I'm working and growing to understand it more because it is so powerful. So let's talk about what passive income actually is, okay? Passive income, according to the IRS, it's actually really specific, and it primarily relates to income from rental real estate or income from limited partnerships in businesses. So what does that mean? So I think rental real estate income, I think most people can understand at the base level, you own a single family home, those individuals rent that property and you gain an income from that, okay? Now, as a limited partnership in a business, now that could be somewhat more complicated, but it doesn't have to be. If you've got an individual that's got a business, let's say a law firm, and a law firm needs $100,000 in startup costs, you could go to a business attorney and create an agreement wherein that law firm or that lawyer, that individual organization could pay you a return for your $100,000 investment, okay? And that can stand true for real estate and many other business activities. And the key is that you're not active in that business. So passive income, obviously it's passive. So if you're actively working in the business, that constitutes earned income and it would not be passive income. So just to kind of summarize, passive income is basically two things. It's basically income you get from rental real estate or partnership agreements that you've created wherein you're not working at all. So now let's talk about the pros and cons of passive income. I'm really bullish on passive income. I'm working every single day, every single year to gain even more sources of passive income. But I know that there are positive things and there are negative things. And depending on who you are, passive income will be, even more positive or potentially negative. I don't see how there could be many negatives of having increasing passive income, but I guess that is a possibility. Okay. So let's talk about the pros. So I've got 3 pros or 3 positive features that I'm going to start off with. I think there are far more than just these 3, but I just want to start off with these 3. Number 1 is lower income tax rates. Okay. So I think that's the biggest thing. That's one of the biggest things with passive income is that, especially if you're an individual, that's at a higher tax bracket. Okay. Because again, with passive income, the tax bracket is not just an automatic 20%. It actually starts out at 0%. Okay, according to the IRS tax code, I checked it today. It could start off with 0% depending on how much you make, and then it could be 15%, it could be 20%. To my understanding, that's basically how it looks in terms of your taxation. Again, talk to your CPA. I'm not a professional at giving tax advice, so before you act on any of the information on this video, please get legal and financial assistance. Individuals who have high incomes, and let's say you're an individual who is in the 37% tax bracket, and you are not happy with the amount of money that you're putting into taxes every single year. And I'll be honest with you, I've spoken to people, in circles that I've been in, and they've complained to me about, hey, Corey, I'm working so hard. I'm just paying so much in taxes. It's really tough. And what I'll say to them is, how much passive income do you have? And funny enough, most of them don't have any passive income. So the second positive feature of passive income is something that many people don't know of, and it doesn't apply to earned income. It's actually that you can apply the losses on your passive income, not only to your passive income, but also to earned income. Let's say you own a rental property, okay? Just base level, you own one rental property and you have expenses for that rental property. You can take those expenses and offset the income that you make on that property. Let's say you make $10,000 a year in income from that rental property and you have $8,000 in expenses for that rental property. That means that you can deduct, and again, I'm not a CPA, but my understanding of it is that you can deduct $8,000 was used on the property. You're upgrading the property or whatever it might be, expenses related to that property. Okay, so that's very key. And I don't want to understate that. I'm not going to say a whole lot about it. I've seen it be very powerful for myself and my family. It's reduced our effective tax rate. In another video, I can get into what an effective tax rate is, but it's essentially, the rate of tax that you're actually taxed at. But you don't have to get taxed at that if you have enough deductions to get that down to the 35%, 30%, even below that to, 28%. 25%. You can do that if you have enough deductions. So now the last and I think the most fun part of passive income is it's passive. And you're like, Corey, well, what do you mean by that? I mean, of course, passive income is passive. But yeah, what I mean is that while you're doing other things, while you're living your life, you are making money. There are benefits to that, right? When you study wealthy people, they're going to tell you want to have your money working for you. Okay, and passive income is one of those ways where you earn income and your money is working for you. You're not out there working for the money. Your money is out there working for you. And that income can take care of your expenses, your housing, your food in the same way that earned income can if you have enough of it. So for me, every year, my goal is to have a higher percentage of our income coming from passive sources. And I've got really selfish reasons for that, because I really love my family and I like spending time with them. So if you love your family, like spending time with them, or it doesn't have to be your family, it could be anything. If you have other things that you'd rather be doing other than working, passive income can help you to do that. That is kind of the last passive income pro that I had. And again, just to go over them, lower tax rates, you can take passive losses against passive income and earned income. And number three, it's passive. For me, passive income is infinitely better than earned income. Okay. All right. So let's talk about some of the things that are negatives, because not, everything that has a pro has a con. Well, I think the things that are negative about passive income, you have to understand, have to do with your time and your understanding and learning and knowledge. The number one con of passive income is the fact that, again, going back to what I said before, is they don't teach it in school. So it's not intuitive for individuals to understand, hey, how do I create passive income? There's a large learning gap that you're going to often have to cover in order to become a passive investor. But you're going to have to understand what the benefits of passive income are. You're going to have to ask yourself, what do I invest in? Real estate? Is it some type of partnership? How much do I invest? And then I think one of the most important things you're going to know when you decide how much you're going to invest and when you're going to invest, it's what's your return going to be? What investments are going to get me the returns that I require for my goals, my lifestyle, my whatever. And then secondarily, this one's kind of tied to the first con, and it's just access to information. Even if you decided that, hey, I want to invest in real estate, I know I want to do that, I have a specific area, I have money set aside that I want to invest. How do you know you have, and how do you access the right information so that you can make the right decision? I'm becoming more and more familiar with those sources of information, but on a base level, you're talking about business publications, you're talking about books, obviously. Things that I've invested in are mentors, watching videos, reading. All these things are going to help you to gain that information you need to be a successful passive investor. And just to kind of sum up the two cons, and they're kind of related, is there's a learning curve, and you're going to need to make sure that you have the right information. You're not going to have the perfect information when you're making these investments, but you want to make sure that you have good information that you can act on. Now, in closing, I'd like to thank you for watching my video. And if it was helpful, would you mind liking, subscribing, and sharing this video? Thanks again. See you next time.